Hey, good afternoon, everyone. This is Forex Brizio. It's 12:20 p.m. on Sunday, October 29th. Hope everybody's doing well. Had a great week. And like I said, it is Sunday afternoon, so the markets are currently closed. But just making a video here on a a simple strategy that you can use for swing trading. I would recommend using this strategy on the 4-hour chart, maybe the daily chart. I wouldn't really go any lower than a 4-hour. It does involve a couple of moving averages. Again, nothing that you may or may not have already seen before. But it does work pretty well, both for catching reversal trades as well as continuations. And so just going to go through it quick and show you a couple of charts and just leave it there. And again, guys, I would not recommend using this on shorter time frames. I mean, you could try this on a shorter time frame, but I'm teaching this just based on, a swing trading strategy. So it only requires you to look at your charts, probably a couple of times a day, just to see where it's at. And if you're doing it on a daily chart, only once a day is fine. So it's really great if you don't have a lot of time, or if you just like to hold your trades and as opposed to being glued to the charts if you don't have time to be watching them and doing day trading per se, and certainly not scalping. So that's my advice on this. But I mean, you of course feel free to back test it and use it how you see fit. Okay, so again, it's not financial advice. I'm not an advisor. I'm not telling you to take any trades. I'm just kind of showing you the indicators and talk about the strategy briefly, and it's up to you to back test it and see if it's something that you think might work for you. So as you can see, guys, it's basically just two moving averages, and these are both linear weighted moving averages. So this is the 200. Let me just drag it over here. It's the 200. Oh, actually, this one's exponential. Okay, so it's 200 exponential, and it's a 10 period linear weighted. Okay, and of course you can pick the color and the line style that you like. Okay, so a 200 exponential and a 10 period linear weighted. Now, a linear, I'm not going to go into how they're calculated. Both exponential and linear weighted basically take more recent price action into account. The linear weighted even more so than the exponential. But if you want to see how they're calculated, you can just Google it. It's not really important. Obviously, your platform will do the calculations for you. But the exponential is very common. The 200 period exponential is very common. And the 10 period linear weighteds probably are not as common. And you can make this an exponential if you don't want to use linear weighted. It doesn't really make that much difference if you change it. It's just a slight tweak. So do whatever you like. So so this is a 4-hour chart. This is the CAD Swiss. And basically, what we're looking for here is to trade reversal. So the reversal would be a crossover strategy. So that would be the 10 period crossing above the 200. Okay, so like we got right here. Okay, that you could just enter. So the crossover on this one happened basically, right about here. So you could enter anywhere in here. Put your stop below this swing, and then obviously this turned out to be a pretty nice trade. This is 268 pips, which on the CAD Swiss is quite a few pips. And then you can see we had another reversal down here. Okay, crossed over down here, and that's another 140 pips to the downside. So the nice thing is that the 10 period will hold against the 200 in a trending market, okay, where it won't, sell cross through it too easily. So because you're using a 200 period, okay. So here's the Aussie Swiss. Same thing here. This is the 4-hour chart of the Aussie Swiss. We had this break above at the close of this candle. You could go long, put your stop somewhere down here. Now remember, guys, these are 4-hour charts, so you have to be careful with your risk management, because these can be, a decent number of pips. Down below the swing is 45 pips. So make sure you position size accordingly. Okay, and then we had this other crossover down here. okay, and you can see price went down. And as long as it's remaining under the 200, you can keep looking for shorts. So price came down, then we had this pullback, all right, and then right here we had this bearish candle cross below the 10 period. So this would have been an entry if, like, suppose you didn't get this one, but you were looking to re-enter. So right here on the close of this candle, okay, this big engulfing candle, you could go short right here, finish this downtrend down. Price corrected again, and we had another signal right here below the 10, okay, and then went down again. And you can see right now, as of Friday, we bumped up against the 200. So this is a really interesting area to watch on this pair right now. Okay, do we get a break and a move higher, or are we going to just, you know, get another engulfing candle below this 10, which we can resume the downtrend? So let's keep an eye on this one, okay, and you know, see where this one goes. I'm just randomly checking here on some pairs. This is the Euro Canadian. Now, sometimes, guys, you will get what you, I guess, could redeem, you know, call a false break. So on this one right here, and this is very common with moving average strategy, guys. So that's why you definitely have to practice good risk management, because these trades are not all going to win. So we see we had a signal here, and then price reversed. It did end up going down a little bit, and then chopped around and, you know, went up. So even if you didn't get stopped out of this, you still could have picked up 60 or 70 pips. So it's not a total loss, but you can see price rallied back up through. So like I said, guys, keep good risk management. And you can see in here, right, where price came down and the moving average did not breach, the 10 period didn't breach the 200, so you wouldn't have gotten sucked into this short position right here, okay, because the 10 period stayed above. And then finally we had a break here, and then this one would have been good. Same thing right here. You can see the 10 period never breached the 200. So, and you know, this is where you have to just not trade these blindly either, guys. Look at the candles, look at the price action. Okay, so this went up here, and the candles broke through. We never got the 10 period, but look, I mean, there was nothing here. We had all these wicks. There was no follow through. Okay, and the price finally did break lower again. Okay, and we had another break lower again. Then finally we broke through right here. I have this blue vertical line, and you know, this one is valid, and you know, you'd be up 195 pips on this one if you had taken that one from that close. All right. So here's another example on the dollar Canadian where you're going to sometimes get these false breakouts. Okay. So we have this one right here. We have price closing below right at the close of this candle. It did go down, you know, 70, you know, maybe 70 to 100 pips on these before it turned. So this is where you might want to look at your next higher time frame. So if we look at this area right here, okay, this is the 4 hour. If we jump up to our daily chart, you can see on the daily chart we were still above the 200. So that's why this makes this a much lower percentage trade, because the daily chart is still bullish. Okay, so even though there is technically a trade here on the 4 hour, you can see that maybe this is either one you don't want to take, or you want to very, very, very carefully manage this. Now, maybe this is a situation where you want to go to your 1 hour chart or something lower. Okay, so here's that breakout on the 1 hour chart. Okay, and just manage the trade accordingly. So if you're basically trading counter trend against the larger trend, the higher time frame trend, in this case the daily, then you want to make sure that you're, you know, looking at that high time frame. If you're going to take something like this, just understand you're going against the larger trend. You can clearly see this is in an uptrend. If we zoom out, right, higher highs, you know, higher lows. Okay, and so again, it's not that you can't take this, because it's still not a bad trade, but just understand that your potential is going to be, you know, not as big, because you're in an overall uptrend on the daily chart. Okay, but I wouldn't necessarily not take these trades, because sometimes you get these counter trend trades that can go for a long time, even though they're counter trend. They can go on for a long time on the 4 hour, and they're perfectly valid trades on the 4 hour. Yes, you're going counter against the longer term time frame, but they're still valid trades. let's see if we can, well, anyways, let's just talk about this one. So this is the pound USD. You can see right here, we broke through, the 10 period broke. So there would have been, an entry right about here. And you can see all through here, price chopped around for a while, but the 10 period never crossed back. So you could have held this trade. You would have been, chopped around for, unfortunately, quite a while. But then eventually it did break down, and you can see there's been no exit. And every time we come back up near the 200, right, we get another sell signal. We get a sell signal here, another sell signal here, okay? And so so that's why I'm saying you can use this as a continuation as long as the 10 period stays above or below the 200. But as soon as it crosses through, then that's a potential opportunity to take a counter trend trade. But again, you should always kind of look at the next higher time frame. And again, it doesn't mean you can't take counter trend, but you just need to be aware of what's happening on the higher time frame, because if you're taking something against a strong trend on the higher time frame, you have to take that into account and not be overly greedy on how much you're going for on that 4-hour chart. Okay, so that's where you want to manage the trade on a shorter time frame, on a 1 hour or 15 minute, especially if you're counter trend, where you can just exit on the break of a structure change or something like that. So this is another way you can look at it. So on this one, if you don't want to see the candles, you could always switch to a line chart. And you can always just, use the line chart as an entry. So I wouldn't manage the trade this way, but, there's an entry right here. Okay, you can put your stop down here, and, you could have taken this all the way up. Okay, and then right here, there's a short position right here. Okay, and that's where we're currently in. So you can also use a line chart if you want to quiet the noise. That's up to you. Like I said, there's the line chart can take out some of that noise because it's only looking at the closing price, but you miss the having the view of the wicks of the candle and the bodies of the candle to see how impulsive that move is when it breaks through. If it's a very small, choppy, lots of wicks, then that might be a false signal. All right. This is a trade I'm actually currently in right now. This is the dollar Swiss, and you can see, we came here, we broke through it, and I took this long position. I'm still back testing this, so I have a take profit up here at the swing. If we go to the daily chart, you can see on the daily chart we're technically still in a downtrend because we are trading below the 200. So I'm just kind of looking at this right now to see how this works out. But I mean, either way, it's it's about 65, 70 pips right here. And so that's not a bad little trade, and definitely work out quick. If it keeps going, then great. And you can see, here's another crossover here. Okay, on this one, never really got, we chopped around for a while and never really broke back below, and then finally it shot back up again. All right, so, I don't want to just keep beating a dead horse on this, guys. You can go and look at this, and like I said, you can use this for a continuation trade or for a reversal trade. And again, I like the 4-hour chart. It's kind of my favorite time frame to use this on, because you definitely will get more false entries if you use it on anything shorter than a 4-hour. So if you want to use it on a 1-hour chart or something shorter, go ahead and try it, back test it, but just be prepared that you are likely to get quite a bit more false signals. The 4-hour chart will smooth a lot of that out. Yes, you're not going to get as many trades, and you're going to have to be patient because, like I said, some of them will chop around for a while, maybe for days before it finally moves in your direction. But, that sometimes goes with it too. And just, always take a peek at the next higher time frame just to see where the larger trend is. Again, doesn't mean you can't take a counter trend trade. Just understand where the larger time frame is and be maybe a little bit more conservative on your targets. So, okay. And practice good risk management. Again, this is, if you're taking these on a 4-hour chart, you're going to obviously have pretty decent sized stop losses. Especially on certain pairs that are, produce a lot of pips. So just make sure that you're, sizing correctly so that you're giving the trade some breathing room, but not, risking too much on the account. Okay, because these are probably going to be trades that you're going to be holding for a while. Again, these are 4-hour candles. These are probably trades that you're going to be holding for at least a couple of days, maybe longer, and to let them play out. Okay, so and then, like I said, you can manage the trade once you're in, then you can go to a shorter time frame and manage the trade and try to, fine tune, where you want to potentially get out of the trade. But I'm just talking about entries here, which again, the entry would be on the 4-hour chart in this case. And then, like I said, you can manage it on a 1-hour chart or 15-minute chart. And if you're trading against the larger trend, I would definitely manage it closely on the short time frame. Because if that larger time frame trend continues, at some point, you don't want to get stuck holding that trade, because by the time you get an exit signal on the 4-hour, you've probably given back whatever profit you made. So if you manage it on the shorter time frame, you can use like structure breaks and any other type of exit, that you would like to use. To try to just, take as much of your profit off the table before that larger time frame continues. So, and then maybe you can enter in the direction of the larger time frame on the 4-hour chart. So take your counter trend trade when the higher time frame trend continues. Potentially you could jump into that trade and, catch both sides of it. So it's definitely an option. So again, guys, pretty simple. 10 period linear weighted, 200 period exponential. 4-hour chart is my preferred entry, this is both a trend continuation and a reversal type strategy. So if you have any questions, guys, just go ahead and drop them in the comments, and make sure you ring that bell notification icon if you just find in the channel, and subscribe, hit that subscribe button and ring the bell notification so you get notified whenever I post new content. And again, guys, I never sell anything. I don't sell courses. I don't sell anything here. It's just various strategies to try, depending on what your time horizon is for holding trades, whether you like short time frame stuff or, in this case, longer, swing trading type strategies. And this is pretty mechanical. It's very rules based, and so that's another nice thing about it. And it doesn't require much time at all on your charts. Again, if you're using the 4-hour as your entry, you probably only have to look at your charts, a couple of times a day, take a quick look, see where things are at, see if there's any entries, and that's it. So you can check it once in the morning and once later in the day, and that's really all you got to do. And if you do get into a trade, again, give it some breathing room, position correctly so you're not risking too much of your account, and then just let it ride, and that's it. All right, guys, so I'm going to leave it there. I hope you have a great rest of your weekend. We'll be back with another video soon. And again, questions or comments, leave them down below. We'll talk to everybody soon. Thanks.